Hello, everyone. Pat Smeeta here with Peachy Lending, going over the daily interest rate update for today, along with the economic news that'll affect interest rates today and tomorrow. We got some news today, so please bear with us. We had jobless claims come in, and initial jobless claims increased from 220,000 to 242,000, while the continuing jobless claims remained unchanged at 1.869 million. Now, believe it or not, these numbers don't reflect yet the layoffs that are happening in the federal government under Doge. So we expect these numbers to be worse and the unemployment rate to rise. At the same time, we got the gross domestic product annualized, and it was unchanged at 2.3% in annual growth. Now, this is actually not great news because 12 months ago, we had gross domestic product around 3% or so. So we've actually decreased the annual growth rate in the US economy, while at the same time, the purchase price index increased from 2.2 to 2.4%, which is inflationary. And that's very important to keep in mind. Finally, durable goods orders increased from 2% to 3.1%. That's actually really good for the economy. So without transportation orders like cars and airplanes, actual durable goods orders actually were flat. At the same time, we've already posted a video on this, but pending home sales came in lower. Month over month, they came in lower at 4.6%, and year over year, pending home sales came in at minus 5.2%. So we're starting to see a decrease in pending home sales. Now, that's probably a combination of no inventory and higher interest rates. We've given you a video on that so you can actually share with the buyers to kind of stimulate more activity. What we saw today on mortgage backed securities, which help determine interest rates, if you look at the intraday, it was kind of flat, kind of going in a range, which means that interest rates kind of close in the same price range that they did yesterday on Wednesday. However, we are hitting some key levels here in anticipation of tomorrow's big consumer expenditure report. So tomorrow's going to be a make or break day. We can either break out of this range and really move higher on mortgage-backed securities, lowering interest rates. But if the report comes in unfavorably, we have a lot of room to go down before we hit some key levels here that'll stop interest rates from going too high up. So please keep that in mind when talking about interest rates to your buyers. Finally, tomorrow on Friday, the February the 28th, we get some information. We get the personal consumption expenditures. This is the Fed's favorite measure of inflation. This is the number that's going to move tomorrow. We have some other information, but this is the number that's going to move things tomorrow. We also get information on personal income and personal spending, which will tell us how the consumer's feeling, and the Chicago Purchasing Index, which will tell us how the purchasers for different companies are feeling, whether they need to increase inventories or decrease them. Do us a favor, follow us, like us, share us below. We want to get this word out to as many people as we can to help everybody out there. Have a great one. Talk to you soon.